Yo, how's it going, guys and girls? My name's Chris and welcome to my channel, CSM Investing. Investing in the stock market is the future, people. Yes, it's been around for God knows how many years and millions of people have done it before me and you, but it is the future. So drop whatever you're doing right now and start investing. Unless you're holding a baby, please don't drop your baby, that would be irresponsible. I know, sorry, bad joke, but still, we keep moving. As I was saying, stop what you're doing and download an app like Trading212 or eToro and invest in your first company. But obviously, do your research first. Or you could even download an app like Coinbase and start investing in cryptocurrencies. Or even go onto Google, type in Vanguard and invest in the top 500 companies in America through the S&P 500. There are so many options, you just have to start now. Trust me, the earlier you start, the sooner you can start compounding your money. Money, making money. Who doesn't want that? But I'm guessing you want to know what the best strategy is. But to be fair, that's a pretty difficult question to answer, as some people have put their theories into action and either come out with great results or absolutely flopped on their butts. Now, it's completely up to you what route you take. No one should sway your mind, as some methods may work for some people and not work for others. It's just like exercising. So in this video, we're going to go through what long and short-term investments are, what are their similarities, and what are the differences between them. And once we've gone through all of that, we're then going to see what applies for different investors and what type of investor I am. Look, all this information that I'm putting out here isn't to sway you to do what I do. It's here so that you can make an informed decision on what you want to do. It may be a little bit confusing at first, but I'll put it in as simple as possible so it's easy to understand. Anyway, I would like to disclose that I'm not a financial advisor, and anything that I do say, please take with a pinch of salt. And before we get into any of that, make sure to like, subscribe, and hit that notification bell. Right, let's get straight into it. As I said, I'm going to make this as easy as possible so it's easy to understand. But even what it is, it's easy enough to understand anyway. So, a long-term investment is something that you hold for over longer than a year, and anything below that, it falls into the short-term category. With long-term investing, you really don't want to sweat the small stuff. And by this, I mean, don't panic over the company's short-term volatility and only look at its long-term trajectory. If you're a long-term investor, your success is based on holding the company for years, not when it jumps 3%. As I've said on a number of occasions on this channel, never take someone else's advice. Even if it sounds amazing, always, and I mean always, do your own research, as you never know whether someone is feeding you a pack of lies. Yes, sometimes these tips may pan out, but in the long run, it's not a viable way of investing. And it also depends on the reliability of the source. As a long-term investor, you should always look towards the future, as I know it can be sometimes easy to get swayed to take some short-term profit, but if you're confident in the company that you're invested in will grow and keep growing, just buy and hold. My most important tip for long-term investors is, yes, P ratios are important, but most investors tend to put too much emphasis on it. It's only really relevant when in conjunction with other analytical processes. So if a P ratio is low, it doesn't always mean that the company or whatever you're invested in is undervalued. And for the reverse side, if the PE ratio is high, it doesn't mean that it's overvalued. Right, so I think we've spoken enough about the long-term investments. Now it's on to the short-term. And as it states in the name, short-term investments are anything that basically lasts less than a year. Now, this strategy is great if you want to make a quick bit of mullah in a short amount of time. And if you're wanting to use this strategy, here are a few things that you need to do. Now, you need to make sure that you are controlling the risks that are involved. for you to be able to trade successfully. And to be able to do this, you have to implement buy stops and sell stops. If you're unfamiliar with what these are, a sell stop is where a predetermined price is set, and once the price reaches that, the stock will sell. A buy stop is used in a short position when the stock rises to a particular price. Using these then limits your downside. Always keep your losses manageable. You also need to learn to use technical analysis to evaluate and study stocks in order to use previous prices and patterns to predict what will happen in the future. And then by doing all of that, it can then help you understand how to make a profit. Two things that are in this technical analysis are the RSI, which is Relative Strength Index, and the stochastic oscillator. Now these techniques are great, but they have to be used with alongside other resources. Simply put, RSI is comparing the strengths and weaknesses of a stock to others. A showing of 70 specifies a topping pattern. Anything below 30 shows that it's being oversold. Stochastic oscillator is showing whether a stock is cheap or expensive. A stock showing 80 is shown as being expensive, and a reading of 20 shows that it's cheap. Make sure to check the patterns as well. These are double tops, triangles, head and shoulders, and double bottoms. As you can see from what we've discussed, there are many differences between long-term and short-term investing, but there is also a similarity, and that's you have to do a lot of research in order to make a profit. And if you don't, I can guarantee that you're going to be in a loss. Maybe you'll get lucky once or twice, but it's not a sustainable way of doing things. As we've discussed what long-term and short-term investments are, it's only right that we discuss what type of investors are actually out there. There are value investors, which find stocks that are underpriced and buy them. Now, this can take a while as you have to do the research on the fundamentals of the underlying companies, and you have to wait for the company to actually rise. But we all know this works since Warren Buffett uses this technique and he seems to be doing pretty well. The second type is growth investing. This strategy focuses on capital appreciation, which entails finding smaller companies with high potential for growth, blue chips and emerging markets. Even if PE ratios and PB ratios are high, growth investors tend to look for companies with above average growth through profits and revenue. The third is small cap investing. Now, this is seen as being riskier as it involves investing in stocks with a smaller market capitalization. Now, this is usually between $300 million to $2 billion. People tend to go for small cap stocks as they can go unnoticed, but I only recommend doing it if you're more experienced. And this is because they're very volatile and very difficult to trade. 4 is a great way of generating wealth over time, and this is through income investing. You can do this through dividend paying stocks, ETFs, mutual funds, and even REITs. These provide minimal risk and can be a reliable income stream. I'm not gonna lie, I've only heard about this one recently, so we're gonna use Google to help us out a little bit. So lastly is socially responsible investing. Now this is a portfolio built of environmentally and socially friendly companies while staying competitive alongside other kinds of securities in a typical market environment. There you have it. We all learn something new every day, eh? I am currently a growth investor as I try to look for smaller companies with a lot of room for growth. Currently, my largest position is a SPAC company called CCIV, who are merging with Lucid Motors. And by the time this actually comes out, this video, I'm guessing that Lucid would have actually merged with them already. And I'm very excited because I can imagine my portfolio is just going to absolutely blow up. And my second largest position is in Planet 13. Now, I've already spoke about this on my channel, so if you would like to learn more, go check out the video. It will be linked at the end. Yes, all the stocks that I'm holding are long term, and I am very confident in every single one of my positions, and I am very well diverse. Now, as I said in the beginning, make sure that you follow your own path, do your research. It's up to you how you choose to invest. My final thoughts here are that you are your own person. You know your own level of risk. And I know you're not stupid because you're here willing to learn and getting ready to invest. So let's just get started. Use your own mind. Don't follow along like a sheep. I'm Chris, and thanks for coming to my channel. Peace. If you're unfamiliar with that,